My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show.
It's good to be back, Jim.
Gold, gold, gold. Big and heavy and hard to hold. This has probably been its best week in the last 4 months.
Things have certainly turned around, not only for gold but silver as well. And I think it bodes well for the likelihood that the lows are in a pretty significant way, and that the bull leg for the next bull leg for the secular bull market is going to get underway, even if it takes a while to become really, really obvious.
David, you talked to us last week about what you thought was going to happen with gold and silver, and sure enough, we have audio proof that you were bang on with your prediction at talkdigitalnetwork.com. David, maybe reflect a little bit more on what you said last week and how that's all playing out now.
Well, you know, this is pretty fascinating, and I want to give credit at the outset where credit is due, because the day that we're speaking of was June 5th, which was a Thursday before last, and over the weekend I got a call from the executive producer at House Street, and he said, "Did you notice what the charts look like for gold, silver, and the U.S. dollar on Thursday?" And I said, well, you know, I check intraday prices sometimes, but not that day because it was a quiet day. So I went back and looked, and darned if we didn't find out in our discussion that there had been a key reversal day on all three of those entities, gold, silver, and the U.S. dollar. And for those people who are not technically inclined, a key reversal day is when prices trade higher and lower than the previous day or week, and then they close higher or lower than that particular range. And so if we were looking for a bull move, we'd want to see the close being higher than the previous day after it had traded outside of that range, and the opposite for a bear move. And so in the case of the U.S. dollar, it closed down below on that key reversal day. It had a fairly big day, and gold and silver closed above that day, and it did so on very good volume. And I think the reason not only I, but probably a lot of other people may have missed it is because it was trading within a fairly narrow range. Prices had been pretty quiet for quite a while. And so on the surface, it wouldn't look like anything special, but when you looked at it and saw what happened, it was kind of like a little tea leaf that's giving you a clue about what might be taking place. And so you and I talked about it the week following, and it was posted, as you mentioned, where readers can go back and listen to that discussion. And we said, you know, nothing is cast in stone, but what we do is we look for indicators like this, sometimes that many other market participants may miss, and then we find the more things that seem to support that, the more confident we are that perhaps our analysis is correct. And as I mentioned to you at the time when we were talking about this, I said, you know, we want to see the next few days are going to be very important because we don't want to see those prices exceeded in the opposite direction because that would invalidate our analysis. We want to see it continue to move away in the direction of the key reversal. And so that's exactly what happened. In fact, it's happened in a pretty explosive way with gold and silver moving away from that reversal day, in other words, out of support and up into resistance. And as you mentioned, having very powerful day yesterday, and then those today, which was up slightly, but it kept all of yesterday's gains, which were truly large, as you mentioned. And so that was exciting. That volume was very high yesterday and today. And, you know, nothing's 100% in this world, but more and more we're getting evidence that the area of support that was established over a year ago in the metals is very likely to hold. And, of course, the mining stocks themselves actually started moving up a few days before yesterday and continued to support that move. Now, in the case of the U.S. dollar, it has not fully carried out our premise yet. It has not been able to exceed the high of the reversal day, and that's encouraging, but it's still trading in the lower section of that intraday range, so we'll have to watch on that. But regardless of what happens with the U.S. dollar in that particular case, the fact that the metals made their turn on very large volume indicates to me, in my technical analysis work, that the bears are going to have their work cut out for them if they're going to try to chew down into all this new resistance to their move on the downside, which has been established just over the last few days.
When any kind of commodity moves in a large volume, I think that indicates there's high interest in it.
It does, and volume in the direction of a particular price move is very important. Again, nothing is 100%. Sometimes volume can give the wrong signal because, as you know, there's a lot of high-frequency trading that takes place in many of these markets. But the thing is, again, the more indicators that you have that support what you're looking at, the more likely that it's a valid move. And, next week will be very important to see how the market handles this new rise, whether it consolidates at this new higher level, which is a breakout level in gold and almost a breakout level above $21 in silver. And we want to see how that holds. And indeed, if we get a retracement back down into that support of the last 2 weeks, we want to see that it does so ideally on lighter volume than what happened before, and then see how that is dealt with. But I think it's going to be a fascinating week. And I'm pretty excited about this because, boy, I'll tell you, we've had a long 3-year slug in this cyclical bear market within the context of what I fully believe is a major, major bull market that has yet to fully express itself on the upside.
Earlier on the show, Ross Clark from CIBC Wood Gundy felt that perhaps gold might hit 1430 to 1470 this year.
That would be very impressive. And, there's a lot of resistance above here. So this doesn't mean clear sailing for the bulls, but what it does mean is that at the very least, we have more confirmation that the wide trading range is going to be supportive of not going down to new lows. Or if it does, it's more and more likely that if those lows are penetrated, they'll be on a spike basis where prices go down briefly and then turn around, because it uncovered so much buying here where we were, and it wasn't even at new lows. It was in the moderately low part of the position, that it really gives credence to the fact that anytime prices dip down into that area, there are buyers ready to scoop up the metal and also the mining shares.
I also think the surprise civil war in Iraq is a big factor for anyone trying to secure their money.
It really is a wild card, because we just don't know how far things are going to fall apart there, because it's already influencing oil and causing the price to rise there. Inflationary expectations, I'm paying north of $4 a gallon for gas. And I think, I don't know if we're that way across the country yet, but I think we're getting there. I think I read something today that this will be the first time in 6 to 8 years when we've seen a $4 a gallon gas that is pretty much the norm across the country. So we're moving into fairly new territory that we haven't visited for some years in the case of the price of gasoline.
Wow, you're getting a break on the price of gas. Try Vancouver, where it's $1.55 a liter if you're lucky, and that would translate easily into $7 a gallon.
Well, it looks like we're going to see at least high, if not higher, oil prices for some time to come. And this is really kind of amazing in spite of all the drilling that's gone on in the States in terms of fracking for natural gas and also the shale deposits for oil. So it just seems like no matter how much they drill out of the ground, the demand just keeps going up.
And for more information, check out the Morgan Report at silver-investor.com. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.